Well, today's session this evening is really about how can I acquire assets that build crypto and create a continual income stream. So it's a bit of a different topic to what we talked about before, in the sense, although there's a bit of introduction into it, it's leading into something else really from a completely different angle, which would be quite interesting to get some feedback from you guys as to what you feel. But just so we get started, obviously today's session is really focused around you, whether you be fairly early on in your business or your career, whether you've got a young family, perhaps considering retiring the next 5 or 10 years, or equally if you're a serious entrepreneur, possibly property investor, like to hustle a bit and wheel a deal. And as part of opportunities, this session today is really very much for you. And it's around the whole principle about helping you to save costs, create income generating assets, and leverage those gains to give you more life choices to achieve your dreams and goals. And the more you can rinse and repeat around that, then so much better. So I won't say too much about myself because a number of you already know me very well anyway, but I will just very quickly say that I'm, I suppose, a stereotypical entrepreneur. Got a number of things right, equally made a few mistakes along the way, but life is full of learning, and obviously I also love sharing and helping other people. So hence running the Wealth Growth Club every Wednesday, or most Wednesdays, there's a good chance for us to enjoy. Just a quick recap, because this is more leading into the main session, we'll only be touching on this briefly tonight, but the whole principles, what we cover as part of the Wealth Growth Club, really ties in around the cash flow quadrant. Obviously many people start off in a job. They may indeed stay in a job for the whole of their working life, probably multiple jobs over a period of time. Clearly in that scenario, not really able to leverage your time. But the big thing is you get paid for what you do, and you go home again and hopefully have a chance to chill, then return back to your day job in the following day. Obviously, when you've got your own business, so you're more self-employed, the phrase that Robert Kiyosaki uses there, where you own a job, is actually quite interesting because, of course, in reality, that's what a lot of people do. There's something called the rule of 3/3, which is talked a lot about in the coaching mentoring space, where if you've got 365 days a year, of which 220 days are working days, so in other words, 260 days less 40 days for holidays and other things that you may have got going on, so that brings it down to 220. If you divide that by 3, that is roughly the number of days that you need to be working on fee generating work to enable you to actually achieve the lifestyle you want. And the right hand quadrant really is about a serious business owner. So you may start off as a small business, but you've got a growth mindset. So where you take people on and are using systems as well to really help you to scale and grow. And if you can actually develop your business to such an extent that there's a lot of inherent value in there, not only can you get the benefit of increased sales, revenue, and income, but also you're potentially increasing the multiples that would you use for your business. So if you decide to exit out of your business later on, that actually becomes a very good ticket out of there. And I can think of 1 or 2 people on the call who've just been through that recently without mentioning any names. And then, of course, the bottom right-hand quadrant is really aimed at people who are investors. Of course, many of us will be in multiple quadrants. So the investor could be someone who's investing in property. You could equally have got some stocks and shares which pay dividend income. It could be that you've created a software as a service business which generates a subscription-based revenue. It could be you've created a product for which you're getting license fees. In that scenario, you're in a position where you are creating a continual recurring revenue stream by doing the job once and getting paid multiple times. So as much as possible, what I'd like to try and do is to help people to get into the 2 right-hand quadrants. And the 2 are very interchangeable as well. But of course, in many cases, people want to stay in their career or their job, and in which case they may stay in the top left, but also be in the bottom right. That's very much down to the individual. So the principles around this really rely around the whole aspect of helping people to acquire income-generating assets, help people to potentially reduce their monthly costs. Now, you may have a perception that actually can't do much about it, but in real terms, as we found by our own experience, actually, in many cases, there's a lot you can do without cutting your standard of living as well. And I can, in a future week, we'll go into that in a lot more detail. It's also about increasing your disposable income. And obviously, a large part of that is by freeing up your income. So you've got choices in that direction. and where possible using leverage. So for example, a good example of that is in property, where you may take out a commercial mortgage to enable you to buy perhaps an office, or equally to buy a property to rent it out and achieve a recurring revenue stream. And that's just one example of where that can be done. Now, there was a great debate last week, which I think, Renato, you were the one that triggered this debate about where this saying actually came from, because Albert Einstein is rumored to have said compound interest is the eighth wonder of the world. I think we'd all agree, actually, it is for all sorts of reasons, but there is a bit of debate as to whether it's Albert Einstein that actually made that quote. If anyone knows any difference, I'd be interested to hear from you on it. And again, this goes back to the point, if you can create multiple streams of income, then of course over time you can put that structures in place which enable that to compound out. So this next part would be is just a little bit of an introduction in terms of just the relevant disclaimer. I'm not going to try and read it out particularly, but clearly today is about entertainment and educational. We're not giving financial advice, and clearly you should always seek advice of a financial advisor. And anything we share in terms of numbers, it doesn't necessarily depict typical results. They may indeed be exceptional, and of course it may be that myself or other people on this call may receive commissions or recommendations. And obviously, whatever you do in life, even if it's walking across the road, has an element of risk. And of course, performance is no indication of future results. And of course, the last sentence there is fairly obvious, which I'll let you read for yourself. I think what might be quite nice to do actually is to have a little bit of a debate if people don't mind sharing. Yes. So are you involved at all in anything associated to crypto at the moment? Or
well, I did play around with Bitcoin. I purchased some a few years ago.
Okay.
And yes, and I sold most of them just as Trump came in, and it started doing very, very well. So I sold and pulled out, and I'm expecting for it to fall down again, and then I'll go back in when it falls. That's
Okay.
so I cashed out, and I'm waiting for it to fall again. Then I'll go back.
Okay. Yeah, nice. Okay, that's good. Rob, I know you always love a good play on one or two different projects. Is there anything you're particularly involved in right now which you're finding particularly interesting?
So for me, right at this particular moment in time, my main focus of any investment, I've had various investments, as you know, in various bits and pieces, but the crypto market right now is I think just about to get into its real bull market phase. The market is obviously, since Trump won the election back in November, the price of Bitcoin rocketed. Altcoins have gone up considerably, even though you look at altcoins and say we're not in an altcoin season, and you still see the vulnerability in altcoins at the moment. But when you look at where they were 3-4 months ago to where they are now, it's a big increase. I think it's a matter of positioning in the right things at the moment. AI is a big thing for me when I'm looking at crypto coins, because I think that they're going to be the next big thing. We can never legislate for meme coins like a Trump coin at the weekend. It went parabolic. Overnight, and then Melania bought one out. I don't know if you would have seen, Melania's coin came out and went up 15,000% in 24 hours. It then dropped back down again. But if you timed it right and you knew, you could have made a nice little kick.
Well, I think Trump made 42 billion, didn't he?
Except I'm not sure he actually made it, to be honest. There's a lot of talk on the TV, on news about is it right that he made money? He's claiming he didn't. I don't think he really knew an awful lot about it, to be honest. I think it's probably his advisors and people around him who did it. But his son, of course, is massively into crypto and making a lot of comments about crypto and about investments. Of course, the US government are talking, although nothing's been said since Monday. But there's Tuesday, whenever he was actually sworn in. But there's a lot of talk about the US having a Federal Reserve of Bitcoin.
Yep.
Japan are talking about a Federal Reserve of Bitcoin. Russia are talking about a Federal Reserve of Bitcoin. The world will eventually run out of Bitcoin because let's be honest, there's only 21 million of them. A number of them have been lost. A number of them have been are under a car park in Cardiff or whatever it is, in somebody's laptop. So if you think about the amount of national sovereign governments who are talking about in Bitcoin, there's only one direction the Bitcoin can go in if everybody starts buying them up rapidly. It's a supply and demand thing. Brian Armstrong, who's the CEO of Coinbase, yesterday was on the TV saying that he didn't give a time frame, but he said we will be measuring Bitcoin as in pricing it in the millions as opposed to the hundreds of thousands. So if you get in it's whereas I think a little while ago it was almost you were almost laughed at if you said you had I'm going to get into Bitcoin because people see it such a volatile thing. I think now it's becoming a very very credible potential reserve. I'm still not going to place the whole house on it, but.
No.
But
exactly. Yeah, it's a really interesting debate. Actually, at some stage, we have to have a debate this one out.
Yeah,
I'm speak over a drink with you sometime, Robin.
Yeah, by all means.
Just on that, there's a question I'm posing here. Actually, if you, Rob, know the answer, or anyone else in this call, obviously with Bitcoin ETFs, is that right? Being launched, and obviously hedge funds using those a lot. I'm just curious to understand what impact that will have in the long run, and of course. And this is a subject for debate, which we won't get too hung up tonight, because obviously we've got the content to go through and I want to roughly stick to time. But it's an interesting, because with ETFs, at the end of the day, it's just a digital equivalent to Bitcoin. Isn't one of the whole reason for Bitcoin that you have it is that you've got it's an ultimate store of value because it can't be replicated. So if the whole financial system got into trouble, could those big institutions actually play out on the ETFs? I don't know the answer to that question. Whereas if you have the original Bitcoin, of course, you're protected because it's a store of value in its own right. And that's a question I don't know the answer.
You are, but an ETF is effectively a basket of cryptos that someone's able to you're able to trade it like a stocks and shares as opposed to the way that we do crypto. I'm no expert on ETFs, to be totally honest, but Ethereum are bringing out an ETF, Solana are filing for an ETF. There's a lot of big layer one blockchains who are filing for ETFs this year. It just makes it, to my mind, it just makes it more credible. It makes it more investable. It means that the financial advisor can effectively invest money for you in cryptocurrencies if you want to do so. I'm very simplistic there, but I think all these things just make it more credible, and for people to then take it a little bit more realistically. And it's just worth saying here, and I wouldn't recommend anybody does this unless they know what they're doing with it and don't just go flying in. But from my own point of view, I keep I've got a whole portfolio of cryptos which are held. I've got spot cryptos which I just buy and leave and see if they go up in value, and then I trade some as well. So there's various exchanges to trade on. I do what's called low leverage swing trading, so I use very low leverage because especially with altcoins, they can go down pretty quickly. If you're using high leverage, you liquidate it very quickly. But there is a big upside to them, and especially things like, for example, if you take Ethereum, once we start see the market start to move properly going upwards, and I'm not just talking Bitcoin, but once we start to move, those real key performance funds, essentially say Ethereum, XRP, Solana, if you trade those with relatively low leverage, you're probably going to do all right out of them.
Yeah, very lovely. So, Rob, thank you very much. Right, I was very conscious that I'd love to give other people a bit of a chance to say something as well. Renato, is there something you particularly got involved in which is working well for you?
Well, what I was going to suggest, Rupert, why don't we try a Rupert coin?
That'd be funny. That'd be so funny. Yeah,
it'd be a nice test to the market and how we could promote.
Will you be the first subscriber to the coins, Renato?
Agreed. Yes.
Excellent. Well, that's what I'd like to hear. So as
long as they'll go in one direction only, upwards.
Wonderful. Okay, Raymond, is there something you would particularly like to share that you perhaps got into, which is working really well for you?
Well, I'm whilst I'm a finance man, as in the accountant by training, I am not into crypto. My wife is, but so I do the year-end reconciliations of crypto, so I understand it. But it's not naturally me. I prefer something that's a bit more quirky and a bit more tangible, as in collectibles rather than
oh, yeah, of course.
Yes, yeah. I like cards and Pokemon cards. Used to collect baseball cards and all that's back in the day and everything else. So
that's wonderful. Well, thank you. Thanks, Raymond. And very importantly, Daniel.
Sorry to interrupt there, Rupert. And I think it's a really interesting point, Raymond. I hope you don't mind me just jumping in here and just saying that. But that's an interesting thing, isn't it? Because your cards are only as valuable as what somebody would pay for them or the interest that somebody sees in them, which is exactly the same as a cryptocurrency, really, isn't it? It's just a tangible thing as opposed to something that's just out there in the ether somewhere.
No, I agree. I do understand. I do get that. Yes.
And in reality, you could take it a stage further and say the pound or the dollar is precisely
the same thing, right?
You believe that a pound is worth a pound. that it
Yeah.
actually continues to be worth £1.
Yeah. There's another market impact I saw some months ago. I'd mentioned before, Rupert, that two of my brothers in the Midlands were very much into old Jaguars and think, well, they'll go up in value for the future. And then you saw the terrible new marketing campaign for Jaguar that had no cars in it whatsoever. And you heard the comment of the damage it's done to the brand name. And the view now, those cars have definitely gone down in value. Will the
no.
brand name for cars ever recover?
Interesting. Yeah, no, thank you. Daniel, have you got something you particularly like to share, which perhaps you got into in the past or currently, which is working well for you? You're muted at the moment, Daniel.
And we can't lip read, Daniel, not yet.
Right. Okay.
But AI will one day.
Now, every time the conversation turns to cryptocurrencies, I'm intrigued by, this is a general question about the human industrial system that we're part of. Why is it that people are very comfortable dealing with something which is hidden, like a cryptocurrency, or even a real currency? As you said, it's all based on confidence, isn't it? It's only worth what people believe it's worth. People are very comfortable talking about cryptocurrency and investing money in it and stuff. But the field I'm in, which is transition and change and sustainability, people are very uncomfortable talking about things which are right in front of our face and tangible and measurable and recordable and understood, like environmental limits and climate change. And people will still say, oh, it's a hoax invented by Al Gore to benefit wind turbine manufacturers and things like that. Why is it that people are more comfortable investing hard money in a hidden thing than in solving the real problem which is in front of our face, and achieving all the real benefits, like the ability to meet societal needs for food, water, shelter, warmth, education, entertainment, healthcare, employment, culture, arts?
It almost goes back to this Maslow's hierarchy of needs, doesn't it? Because we all need money to live, but what comes first? You know, is it oxygen, is it water, is it food? And actually the environment, of course, is a key part of it as well, isn't it? So yeah, lovely. Well, some big questions there, which we weren't trying to deal with tonight, I don't think, but very relevant.
Well, that's the question. Yeah, that's what I'm thinking.
Thank you. If it's all right with everyone, I'll continue with the meat of the presentation, if that's okay, and I hope we'll give it an opportunity for debate around it as well. So I'll just share my screen again, if I can figure out how to do it. Sorry, it's this button here. Bear me a second. Okay, so here we go. Right, just make sure you can see it, which I think you can. Yes, good. Okay. So obviously, when we're dealing with in the crypto space as well, none of us want to be this guy. I'm sure we're pretty well agreed with that. I think we've perhaps individually been, certainly I have, and a number of you in this call have been caught by things in the past which are not so desirable. But there is actually a lot of fun we can have with these things along the way. So, so basically, the session really is about making money through crypto and crypto mining. And there's a bit more of a clue there. So I'm going to state some of the fundamentals. First of all, around Bitcoin, simply because that is the granddaddy of them all. And obviously, it was introduced in 2009, and has been debated as 21 million. It can only ever be a maximum of 21 million. It can never be deflated because there's only a limited supply. So it's not like the dollar or the pound or most fiat currencies, which can just be printed into oblivion till they're not worth anything. It is, on the one hand, very volatile. But if you look over its lifetime, it's gone up year on year, 60% a year, which is quite amazing. And when you consider there's also been periods where perhaps it's dropped dramatically over a period of 1 or 2 years, fundamentally it's come back again as well. It is Ponzi proof, and it's very much seen as people's money, and it's also decentralized in the sense that no state or government can actually control it, and effectively it is anonymized. Although obviously I'm sure different government agencies will continually try and track individual wallets and no doubt be able to trace funds from time to time, but it is anonymized. And the governments, as Rob talked about today, especially the US government, Trump's promised that the US Federal Reserve are going to be mandated to purchase 1 million Bitcoin. Now, I don't think there's been anything that's come out in any of his declarations up to now, unless something's happened today, but I'm sure something will come through the next few weeks. Obviously, hedge funds, as again Robert's alluded to, are getting heavily into corporate entities through ETFs. So that, of course, builds in more and more credibility. The balance really is that Bitcoin should be part of everyone's portfolio, just as an element of gold and silver, because it is seen as the ultimate store of value. So what things to avoid in cryptocurrencies? And now this is a little bit general.
Can I ask, so just on that previous slide, where does that 21 million and no more come from?
Well, basically the whole architecture around Bitcoin, it's being created where it's not actually possible to create more than 21 million Bitcoins.
I don't believe that, honestly. And I only use the example that with Elon Musk and his satellite projects I'm dealing with, he promised 3 years ago he'd only ever onboard 3 global distributors. That would be it. 6 months later, he really shocked the first 3 who'd filled their warehouses with equipment because he changed his mind and he brought on board another 9. So I'd really question, what is the science that says we can't do 21 million?
I can't answer that, but it's commonly known that there is a maximum number that can be created. Now, whether the original author of the Bitcoin project, which causes no one really knows who he is, has perhaps got a backdoor way in, no one knows. But architecturally, it's been designed to have a maximum of 21 million. Whether something can be behind I don't know. But up to now, the belief of the whole financial system is that basically no more than 21 million can be created. That's my understanding of it.
And I suspect it's not really a limit, but it worked for the market. And if necessary, they'd say in 5 years' time, this is Bitcoin 2.
Well, it might be another fork, like Bitcoin Cash. Bitcoin Cash is a derivative of Bitcoin, but it trades completely independently. So it's a totally independent currency.
Bitcoin itself has an embedded source code that means it can't, and the amount that can be produced, the blocks that can be produced, halve every 4 years. And you just can't get around the protocol of it in the way it's been built to be able to create more Bitcoin. You could create an alternative to Bitcoin, but then I guess things like Ethereum and such like would say they're similar, but Bitcoin, it has an embedded code in it.
Yes.
As you say, Renato, there's cleverer people than me out there who probably can find a way around it.
Yeah, no, exactly. Okay, so moving on a little bit from that, things to avoid in crypto, and this is a little bit generalized. So because this doesn't mean to say every NFT or every cloud mining project out there is a Ponzi or is destined to fail. But if you actually look online at the vast majority of cloud-based mining solutions or crypto-based reward schemes, they're actually out there. The vast majority of them either are some form of Ponzi or equally are destined to fail. And I'm afraid the truth is true with many NFTs. Now, there are some good ones. But you should be aware that anything that's being marketed as an NFT, you really have to do a lot of due diligence around it. And the other thing is, which is interesting, is multi-level marketing businesses. If they're run properly, they can be very legitimate. For example, there's one I can think of in the UK, which has got an excellent reputation, which in terms, especially to do with the utility space, and they indeed have been recommended by Which a number of times as well. So there are some good ones. But the trouble is, in the online space, when it's predominantly financially based products that are being promoted, MLMs can also encourage the wrong type of behaviour because you get the greed of the individual leaders, and that comes above everything else. And quite often, those people are quite charismatic, so they can build very big tribes. So if you see a online scheme in the crypto space being marketed by an organisation which clearly is an MLM, you probably should have a very high levels of alertness to that. Is that it's probably a good thing to stay well clear of, to be frank. Once it starts to get a massive crowd in that way, you have to question how people are getting paid, and that's when the integrity can start to really go out the window. There are other things which can be regarded as very high risk. Many of the newly launched meme coins now, some of them are very, like Doge is a good one. Obviously, we've heard about Trump today. There are some which have got real potential and are doing very well, but many of the meme coins will be here today, gone tomorrow. But equally, you can have a lot of fun with those as well. So if you're prepared to risk a small amount, i.e., no more than you can't afford to lose, then you can make some really good returns. And smart contracts. Now, smart contracts themselves, if it's a genuine smart contract, can be very good. In fact, Ethereum are the masters of that through their cryptocurrency, because of course there's lots of smart contracts built into the Ethereum network and the other way around. However, smart contracts, if you see a token that's being represented with a smart contract, you have to look very hard at the liquidity of the token. And indeed, because at the end of the day, if the person who created the smart contract chooses not to support it anymore, that smart contract actually becomes worthless over time. And I think a number of us on this call could recite examples of that's where that's happened. Does it not mean to say that a number of smart contracts are really good? In fact, I know of a company which is, can't think of their name, but very much in the facilities management case, and they use smart contracts all the time, because obviously it's combined with the method of payment, and the contract's built into it. So it's a series of simultaneous transactions, which isn't all about money. It's actually about some form of function or activity associated to it. So this slide is just mainly to encourage people to think about this behind the scenes. It's not saying the facts with everything. In terms of crypto, now this is only a very, very small list. There's literally a massive list of very legitimate cryptocurrencies. Obviously, Bitcoin is the top of them all. Ethereum is the second biggest, although I believe that XRP is coming quite close to Ethereum now, and it could well end up overtaking it in terms of market capitalization. You've got Solana, Cardano, Polkadot, Polygon, also known as Matic. Those ones have been around for a long time. XRP or Ripple was in danger of being almost closed down or severely sanctioned by the SEC in the US. And in the end, it was ruled that effectively the SEC was being uncompetitive, and obviously Trump had got his own agenda, but he got rid of the head of the SEC, and since then XRP has really sort of thrived, and there is a lot of talk about that it could really go on and achieve great things. So it's just a little bit of a list of ones which you have to look at. There's many others, and you can go to sites like CoinGecko. There's lots of CoinMarket. I can't remember the full name of it now, where you can look at every single cryptocurrency, find out the history. That's sorry, it's called, Rob?
CoinMarketCap.
That's it. Thank you very much. So CoinGecko, CoinMarketCap, you can get some really good apps for your phone, whether it's iPhone or Android. You can download it. Equally, go onto the web browser equivalent and find out a lot about each one of those coins and look at their market capitalization and their performance and everything else that goes with it. Then this part here is very relevant. People, for example, particularly who want to set up some form of regular savings, but also to smooth out the volatility. And for people who are very risk averse, this is a really good way of getting into it by using the equivalent, dollar cost averaging. So it might be, you might decide, for example, your disposable income each month is, say, £50 or $50, and you could set up some form of savings plan through your exchange potentially, where you put in a certain amount each day of the month or each week of the month, or just once a month, and over time that smooths out the market volatility. It can also dramatically simplify the investment process through consistent contributions. It also means that you're not being driven by emotionally by your decisions. I think some of the best and worst decisions that we make are when the fear of missing out kicks in. FOMO kicks in because we make emotional decisions, and I've been guilty of that probably many times, as well as many other people as well. And also it minimizes the chance of making poorly timed lump sum investments when we try and second guess the market and the market actually doesn't go the way we expected. And it avoids also quite a bit of stress in terms of trying to predict market movement. So for example, if you take the view with some of these currencies, say Bitcoin is just a case in point, if you put an amount each month into something like Bitcoin and just almost forgot about it for 2 or 3 years and went back to it, so long as you don't feel you need that money urgently at any point in time, you're able to be selective when you sell it. And cryptocurrencies tend to go in cycles through a halving process, which has been talked about already today. The other thing is with something which is worth highlighting is wallets. Now, this has been an interesting one. You obviously will recall what happened in the financial crisis of 2008, 2009, when NatWest nearly went bust. It had to be bailed out with a huge amount of money, Northern Rock, etc. Basically, the reason I'm flagging that up is that when you put money into a bank, it's no longer your money. It effectively becomes the asset of the bank. And there are all sorts of challenges with that. So let me just let someone else in a second. But the same is very true with cryptocurrencies and wallets. So, for example, if you took a very well-known one, let's say like Coinbase, with Coinbase, sorry, just bring my slide back up again, and many of the other wallets, they are prone to potential attack. Also, if you get, for example, if you get, it's exchanges do disappear as well, because when you put funds into an exchange, you put your Bitcoin into an exchange, that Bitcoin effectively is not yours anymore. It's in the custody of the exchange or the wallet, and therefore, if that exchange or wallet gets into financial difficulties, your own crypto is potentially at risk. So as much as possible, apart from what you might be doing by leaving things there to trade, or you may be actively trading, or you're actually converting from one cryptocurrency to another, ideally what you want to do is to actually transfer your funds, rather speaking literally here, to a hard wallet. The difference is then is you're in total control of your funds. No governments, well, perhaps governments can, but no one individual can really take that away from you, because your funds aren't stored in an exchange. You're protected, and you can get a hard wallet from as little as about £50 or $50. Some really good ones. There's three names which are worth considering in particular. There's the Ledger wallet, there's Trezor, Trezor, and there's another one which is a more recent one which has become very popular, called Tangem. That's Tangem. So Tangem one is particularly nice because you get either 2 or 3 what looks like credit cards, and it works very well with your mobile phone, but your funds are very secure using a hard wallet. So it's just worth bearing that in mind. So just a quick reiteration, the importance, this goes back to the importance of creating income generating assets, obviously as part of your overall portfolio. And around that, the next part I wanted to touch on is about how you could generate your own income generating machine or machines, rather tongue in cheek. Now you might think this is incredibly difficult to do, but actually this whole world has really opened up. So it's available to all of us now, not just a select few. Basically, in terms of ease of setup, some basic questions. I suppose around this, what you probably should ask yourself is, can you afford to invest in basically a proof of concept? This is just for yourself, okay? Do you happen to know what your electricity rates are? Okay, it sounds a little bit geeky there, but actually your utility bill will tell you a lot about that. Do you have a basic understanding of crypto and how it works? I don't mean extensive knowledge, but at least a basic knowledge. These are sort of 3 questions you'd really ask yourself. Something which is really important is to understand how you determine what your return on investment is, including your expected daily return. And that might seem a little bit overwhelming, but actually, again, there are very easy ways of doing that. And for example, it may be that by using some piece of equipment, it might be in theory you're making, I'm making this up, but say $50 a day. But if your electricity rates happen to be sort of 25p a unit, which is very typical for the UK, it may be that those rates you'll be losing money because the cost of actually running those machines would actually be higher than what you are actually generating in the way of revenue. But there's some very good solutions around that which I can explain. If someone can come in with a proof of concept just to test it for themselves, have a bit of fun, you can literally start from a couple of £100 for a piece of equipment. Now it may be known as what's more of a lottery miner, but nevertheless it gives you a little bit of feel for how these things work. More typically, if you were to basically buy your own equipment to do this, you probably need ideally between £1,500 and £2,500 to get started. But if you haven't got that budget, you can just start with a few £100 literally and just prove the concept to yourself, make sure you understand it, and you'd learn a lot just by going through the process. So if, for example, you determined you wanted to achieve perhaps a $50 daily return as a rough guide, it may require you to spend about $10,000 or pounds, you'll take. Okay, and it also may make a lot of sense for you to actually look at hosting so you can get the really cheap electricity rates. And I'll explain a little bit more about this in just a moment. Let me do that now, actually. If I show you this screen here, there are websites you can go to, which I can explain, which basically list every single machine that's available today, and actually tells you what the power consumption is. Now, it sounds a bit geekish, this, but actually it's a lot simpler than it sounds. For example, if you look at the top machine there, which actually generates a profitability of about $65 a day, okay, as a rough guide, that's using 7,600 watts or 7.6 kilowatts of electricity obviously, and if there's 24 hours in a day, that's 24/7, 365. So this is where you have to be really aware of your costs, okay? But that figure there, the profitability, is taking into account your electricity costs. But in this particular case, it's based on 8 cents a kilowatt, okay? Which you can achieve by using data centers rather than trying to do this in your own home. So you don't actually have to have these things in your own home. You could host them in the US, for example, and that's exactly what I've got. I've got 2 machines now, which I'm hosting in the US, and that's a good way around it. But it's not like a data center which you'd be used to. For example, Renato with BT, and I'm sure Rob, but you have your servers in your office, etc. You know, just you can run those pretty well in any normal office environment. And maybe you've got some air conditioning there as well. With these, it's a very different approach altogether. But if you look down that list, you can see the power ratings for each one of those machines. So this one here, for example, is using only 100 watts. Now, I'm actually not 100% sure whether that's accurate, that one, actually. But anyway, but from that, you can get that underlying data. So some of the key benefits around this, and no doubt what we're discussing today is going to pose many more questions than answers, but that's the whole purpose of today, is to actually provoke a bit of thought and look at some of the options around it. Some of the big benefits with this is you actually can work it so you physically own the asset. So you buy the machine, you control the assets, and of course you can offset that against tax as a legitimate business purchase, which I'm sure Raymond will give you a beautiful explanation of how that would actually work. It's relatively easy to set up. If you've got a bit of knowledge already of crypto, it certainly helps. Certainly, I would be able to help you with this if it was of benefit. Equally, there are many cases where, for example, if you bought a machine beginning part of last year and were to sell that now, you may actually find the machine you bought last year has actually gone up in value. The second-hand value is actually higher than the original purchase price. And the reverse is true as well. If, for example, the coin that you've chosen to mine, using rather loosely here, has perhaps dropped dramatically in value, it could be that you choose to switch your machine off because it's not profitable, and it may be the second-hand value of that unit is actually it's not worth very much. But if you choose wisely, then it can be worth considering. But the big thing is you actually own the asset. It's also a really good way of creating passive income. Now, there's a great debate that took place last week about is it possible to achieve passive income? And the bottom line is probably not, but you can get pretty close to it. And with this, you, broadly speaking, once it's set up, it's not like a PC, you've got to keep on restarting it, or perhaps Windows decides to imply it to upload all its multiple updates, and just drives you nuts every several days a month, you know, when it keeps on doing it at the most inconvenient time. These machines are literally designed to run day in, day out, month in, month out, with very little monitoring. You may choose to monitor it. In fact, I indeed do. I do go in a couple of days, times a day to have a look. But in reality, it's only because I want to just see how things are performing. It's also another way where you can effectively do dollar cost averaging, because what you're doing is, let's say you making these figures up, but let's say you invested $10,000 in a machine, which of course you own. Okay, that machine, for example, making this figure up again, might be generating you $50 a day. Okay, well, that's buying the equivalent of $50 worth of Bitcoin every day, or Bitcoin Cash, or it might be Dogecoin, or it might be Litecoin, for example. So you're actually spreading your investment out over time. And where this can work really well, I'm sorry, the cats decided to join in, is it can enable you to get a hold of pre-released coins before they pump. So in other words, you've got coins, and obviously this politically implies to certain meme coins, is that you may not be able to actually go out and buy those coins, but if you may be able to mine them, and because you're able to mine them and build up like a little bounty bag, as it were, in advance, you can actually acquire those before they pump, and that enables you to have some first mover advantage when you come to sell. So in terms of some of the coins which can be mined at the moment, and this is just a sample list, you obviously got Bitcoin, Bitcoin Cash, Ethereum Classic, not Ethereum. Ethereum did a fork about a couple of years ago. So Ethereum Classic you can mine. Litecoin is another one. Doge is one of the most popular ones, along with Bitcoin. You've got smaller coins like Casper, Alphium, etc. And there are literally hundreds of other smaller coins you can do it with as well. But moving on fairly quickly now. This is a screen here which shows the profitability. So you've seen the cost on the left-hand side, you see the daily profitability. So as a rough guide, if something is generating you $65 a day, that's equating to about $1,950 a month, or about $23,000 a year. Equally, if you've got a machine which is perhaps more of a budget-based machine, might be generating you $29 a day, that equates to a profit about £870 a month, or $10,000 a year. You have to take these figures with a bit of pinch of salt, because these figures this website I can take you to actually is dynamically updating literally every sort of 30 seconds or so, based on the current performance of those machines and what the hash rates are and the value of those coins. So you can have scenarios where you buy a machine, for example, and everyone decides to buy the same thing. And of course, because you've got a lot more competition, your rates that you can make in a day can actually drop as well. And equally, the converse is true, that you get perhaps people dropping out, such which some of the machines off, and you find the prices going up again. So it's actually quite an interesting market to understand it. So
my observation just was, if the individuals let the machine do what it was proposing, would they all go in the same direction? Because the danger then, of course, is you could say, well, the market's being manipulated because somebody else would be sending people in one direction to their benefit.
Right, that's a really good question. These are known as ASIC miners. That's ASIC, and these miners they run by scripts. So they're very, very unlike a PC, which can run any piece of software pretty well and any program you want to run. These are very specific. So you buy a machine which is actually pre-programmed to mine, and they're specifically designed for mining only. Okay, and because they run on a script, they're designed. What they do is they use to effectively validate the blockchain, and they work on the principle that every now, if it's Bitcoin, for example, you work in pools rather than individually, and basically, effectively, you're becoming part of the infrastructure, the whole validation infrastructure. So you're right in the sense that once, for example, Doge is a particular popular one at the moment, Doge and Litecoin. It's quite possible to get some really good returns with Doge and Litecoin, and it's been like that for the last year or so. It's been very profitable for most people, but you'll probably get to a point in 6 or 9 months where so many people are doing it, the daily returns will drop. Okay, but generally it's not a sudden massive drop. It tends to be a gradual thing, and there's a lot of research you can do, which I can show people how to go about it. So you make sure you're buying the right equipment. And you can even predict it to a degree, because you can look at graphs which show the performance, because actually there is quite a bit of consistency there. But obviously the volatility of the coin kicks in, as well as the hash rates. But hopefully that answers that question. Okay. Can I give anyone else got some questions they'd like to ask?
So is this a mining device in your home, or is it in a base in Texas, for instance?
So basically it's entirely up to you, because again, it'd be your asset. What I would say, one of the things I'd suggest, and this is why it's so important to understand your electricity rate, because the trouble is in the UK and the US, and are you based in Ireland?
I'm in Cork, in Southern Ireland.
I don't know what the energy rates are.
I'm involved in mining myself.
Oh, you are? Oh, are you? Okay. Which type of mining are you doing?
I'll talk to you off this call.
Right. Okay.
Okay.
All right. So obviously, I don't know what the rates of electricity are in Southern Ireland, but in the UK, a typical rate would be about 25 pence or 25 cents per kilowatt hour. It varies dramatically. In my case, because we've got solar panels and things like that, we're paying more. We're paying 36 pence peak and 6 pence between 12:30 at night and 7:30 in the morning. But of course, these machines, you really need to run them 24/7, 365. So I made the decision straight off the bat. I wasn't going to try and host these ourselves. I've just basically bought a couple of machines and basically arranged for them to be shipped. We could have done it to possibly Sweden or some other countries like that, but it's about trying to find areas where the companies concerned to host them are trustworthy, but they've got contracts already worked out with their energy providers, so you're buying into perhaps a year's worth of rate at a certain rate. So, for example, at the moment, I'm paying on one 6.67 cents per kilowatt hour, which is incredibly low. On another one, I think I'm paying about 7.5 cents per kilowatt hour, which again is also very low. And why that's really important, it sounds really geekish, but that determines your profitability. If you make sure you've got your energy costs really low, typically what a lot of data centers do, and they're not data centers like you and I be familiar with in the BT or etc. might use. These would be what happens is you typically don't pay a hosting fee to these companies or any management fee. But what you would do, it may be that they're buying the electricity at 3 cents an hour and they're selling it to you at 6 cents an hour. So their margin is they make their margin through the profit they make with their energy providers. But it also gives people access, like you and me, to very cheap electricity, so we can actually buy these submachines and make good profits, if that makes sense. So hopefully that's answered that question to a degree. Just a very quick summary. These are the sessions that we plan to cover over the next few weeks and months. Okay.
We can't see the screen yet, Rupert. It's not come up yet.
It's come up on my side. You might just need to click.
I can't see it. Can anybody else see it?
Rem, can you see it, or Rob?
Yeah,
I can see it.
Yeah, it's coming up now.
Yeah, it's just coming up. Right. You did the right thing.
Okay, thanks, Renata. It's also a bit of latency there, isn't there? Yeah, so these are some of the topics. So we've got something around personal growth. Obviously, we've got how to grow and scale your business to reduce costs, which is a really meaty session, actually, although the title deliberately doesn't give too much away. The whole principle around AI is absolutely massive, and we're going to be having a session on that over the next few weeks. How can you invest in people and grow my business to minimize costs? And again, that's not what you think. So we create a bit of mystery here as well. How you can invest in small business but at minimal risk for maximum return. I think Renata's probably got an idea on that one. Is property investing still good for building assets and income? In fact, we're going to be covering property investing next week. Okay. And then how to invest in crypto, avoid Ponzi-nomics, and how you can get involved in stocks and shares without knowing how to trade. And we found a really good platform, which is FCA regulated as well, which is it's a well-known UK-based company as well, which is probably worth knowing. And under wealth growth, again, how you can generate an extra £150 to £1,000 extra per month in disposable income. Again, deliberately leaving a little bit of guessing there, but there's got lots of good things to share. And how you can invest in green technology for maximum return and minimize risk. Now that could interest our friend Daniel in particular. And then how you can acquire assets, build crypto, and create continual income stream. Well, we covered that tonight really through the mining side of it. And then obviously about investing in the ultimate hedge against inflation, which of course is gold and silver, for those of you who are not aware. And a quick just reminder, this is what we're trying to do as much as possible, is to encourage people to go to the right-hand quadrant, two quadrants of the cash flow quadrants. So maybe you're just in the bottom right, maybe you've already run a very successful business, or you could be in perhaps one of the two left-hand quadrants, but ideally if you can position yourself so you're in the bottom right-hand one as well, it positions you, well as far as the future is concerned, around those four principles which are highlighted on the screen. And obviously really interested about focusing on people individually, their families, and what is going to help them to move forwards in the future. In terms of how people can further engage if they want further help and support, what we're sort of largely doing with these sessions is covering the why and the what, if that makes sense. A lot of the how, and obviously I will be sharing some of the how as part of these sessions, is going to be through like a coaching and mentoring program, but I'm trying to make this very affordable. But I'll just quickly go through this, and I'm going to then give you an option if you want to look at it. So this will basically be run as a 13-week coaching and mentoring program. To start with, we're limiting it to 5 people. Obviously, that may change over the next 3 or 4 months, but at the moment, 5 people. And there's going to be 10 hands-on sessions, which is based around video coaching and mentoring and active workshops. And we'll be doing some real stuff together. So if you want to know how to set up a mining pool, for example, we'll actually do that as part of a live session. If you want to set up a crypto wallet, or how to tie in a hard wallet with what you're doing, or equally what miners to go and purchase or to look at, I can show you the websites to achieve all those things. Give you access to a resources library, 5 personal mentoring calls over that time, and then also give you access to a closed WhatsApp group where you can ask questions in a very private but secure environment, amongst your 5 peers. Obviously, under the understanding, it's not offering financial advice here. It's more about a small collective group of individuals who share common interests. What I've tried to do is make this really, really affordable, because I just want to make it available to people as much as I can. So all I'm asking people to do is, if they want to be part of this, is to commit to paying a one-off payment of £297. They can pay by 3 installments if you wish to do so. And I even back that by not a 30-day money-back guarantee, but a 90-day total satisfaction money-back guarantee. So if there's whatever reason you've taken part and you just don't feel you got good value out of it, then you just ask and you will get your money back. And as part of this, if you wanted to engage in this, it would be literally just a case of booking in a 15-minute discovery call with me to see if it's right for you and whether it's a sort of a mutually good fit and whether I feel it can make a difference. And then finally here, what I've done is I've created a little what's classed as a link tree. If you've got a mobile phone, if you are able to just hold that up to the screen and just grab that QR code, it'll save you having to type anything in. In fact, what I was going to try and do, which I can't figure out how to do, here we go. There we go. I've actually put the Linktree address in here. For some reason, I can't get back to my screen again. Just wait me a second. Sorry, it's shaded out. There we go. Got it back. I'll just quickly run through these menu options, just so you know. The first one is really, if you're not already a member of the WhatsApp group, you just can click that button there. Then you can join. The second option on the menu is basically where I give you access to a catch-up recording. Wouldn't be of today's session. It would be of the session we run typically about every 4 or 5 weeks, which is intended for new members. There's the third option down is really when you want to join in on a Wednesday, because it's a generic link we're using on Wednesdays. The fourth one is if you want to join the YouTube channel. The fifth one down, this one here, which the green eclipse around it, is if you want to book a 15-minute call in. It just goes straight to my calendar and you could just book it there. And the last option, which you don't need to worry about today, because obviously I'd like to have a chat with you first, is if you want to actually book into the coaching and mentoring program. So I'm pleased to say that it's actually a wrap. If you've got some questions you'd like to ask, obviously please do feel, as far as the session itself is concerned, it's finished. But obviously, if anyone's got any sort of questions they want to ask, happy to stay on and answer those for a bit if it'd be helpful.
Okay.
Okay.
All
right. Well, I think in which case,
Rupert,
yeah.
I came to the meeting late because I was in another meeting, and I came in when you were talking about, I think it was cold wallets or hard wallets. Two questions. Can you just differentiate between what the difference between a hard wallet and a cold wallet? And my second question is, you're recording this. Could you make that available? Because that's a section that I would really like to watch.
Right. Okay. Well, if I deal with the second one first, I don't know if I've been asking the group about that. What I'm trying to do is to see whether I can get to do like an edited version, which is like a condensed 20-minute version of the session itself. The only thing is, by doing that, it slows me down actually putting into the group. So what I'm going to try and do is, so the bottom line is I'm going to do my best to make recordings available, but it won't necessarily be the next day. And it'll be probably.
I'm sure there's an AI app that'll do it for you in a few seconds.
Yeah, that's right. There are. Yeah. Okay, so I'll do what I can, mate. And certainly that's the plan, is to try and make these available. To answer your first question, a soft wallet would be one like Exodus, for example. I don't know if you're familiar with Exodus. It's one that's a decentralized wallet. And it relies on you putting a 12-word seed phrase in which case, in theory, even if you lost your Exodus wallet, you could recreate a brand new one, or even use another decentralized wallet and get your crypto back. But the other side of it is there is a fundamental weakness that they can be hacked, of course. It's difficult to, especially with something like Exodus, but nevertheless it can be hacked. Whereas a hard wallet is taken typically to a physical device. So Ledger is actually a physical device. The Trezor one is a physical device. If you go for the Tangent one, it's a little bit different. I don't know where it's going to come out. Can you see that? It looks like a credit card. Basically, that has got a special chip in it, which most phones can read, and it means you can use. You actually get either 2 or 3 cards with it. And the big benefit is, of course, if you use you can use a cloud-based wallet on your phone, but to authorize any transaction, you have to hold the card against the phone. It reads it, and it also uses face identification with your face, and you can even set it with a pen as well. And you can also set it with a seed phrase if you want to be really belt and braces. If you're worried that you might lose your phone, or you might get broken into and lose your hard wallets, you can even build in, so you can store a seed phrase, so you can still get it back if things go horribly wrong.
And it's interesting, Rupert, because if you can see on the screen at all,
yeah,
that's my new business card.
Okay.
And it's got that chip in it.
Yes. So what chip? What is that for? Accessing buildings?
No, it's a chip that can do financial transactions, can share your details, set up links, all sorts of things like that.
Oh, nice. Yeah, no, that is good. I mean, that's a really good example of. Is it called NFI technology? I can't remember.
It is, yeah.
Yeah. In effect, the example I've shown you there is one of those types of very secure chips that's put in. but it's designed in this particular case just to work with one particular make of hard wallet. And that's where it's quite useful to have be able to store a seed phrase as well, because even if that manufacturer went bust, you would be able to take your seed phrase and load up another wallet like Exodus, put in a 12-word seed phrase, and in fact, you'd have access again to your crypto. So it's actually a very, very good way of backing up. So, right, any other questions? Any comments? Right, well, hopefully everyone's enjoyed this evening. I'll say a big thank you to Raymond, Daniel, Renato, Romeo, and Eric for joining in. And any questions, do drop me a personal WhatsApp message, and I'll be very happy to try and help. All right, have a lovely evening, everyone. Thank you very much. Yeah, cheers.
All right,
Thank you. Cheers.
Bye.
Bye.